Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, 27th of July. Oh boy, today it's continuation on the economic data. GDP growth rate quarter over quarter advance for Q2 came way higher than expected, 2.4%. We were expecting 1.8. Price index 2.2, we were expecting 3. So two good news for the advanced GDP for both growth that avoids the fears of recession and also price index that shows that prices are going down the GDP contribution. Initial jobless claims came lower than expected and continuing jobless claims lower than expected. So tight labor market coupled with the fact that growth is growing, GDP expectations is higher than expected, pushes sentiment to the upside. And after yesterday's big earnings on Meta and yesterday's FOMC details, I went through that through all the earnings, Microsoft, Alphabet, Meta, and also FOMC details in today's video forecast in the morning. If you didn't check that, go ahead and check that because it's a really good video for today's forecast. And if we check the forecast for the interest rates in the upcoming months, we are seeing with a 78% of probabilities flat for 1, 2, 3, 4, 5 until March 2024. And then on May, we are starting to cut rates with 39 probability. This is what markets are expecting. This is more or less what Fed is trying to do, but Fed is data driven. Markets are expecting no more interest rate hikes, just staying higher for longer until May 2024, a lot of months until there. This will cause a lot of pain in the economy, and hopefully we are avoiding recession. But Fed left the door open to raise interest rates if data does not come as expected. So watch out for that economic data because it's going to be key for the outlook on the interest rates. This is the Nasdaq futures 30-minute chart. I want to start talking about this time frame because on this day, that was on Thursday, 20th July, we had a pretty bad day. We had these beautiful single prints to the downside. This is called single prints because momentum in that direction didn't provide any opportunity for pullbacks, for consolidation, for structure. So we left this kind of open, this intraday gap on the 30-minute that today we are testing right there. That coupled with the fact that we have a lot of resistance, headline resistance there, and some pivots from yesterday, we are quite volatile and quite in the green because during the pre-market, oh boy, look at this huge gap. We were opening with a huge 1.21 percent gap in between the two single prints ranges and in between the resistances. We left yesterday's high quite below, and as always, when we have a huge gap on the day, it's difficult to continue higher, but we tried. We went through the first pivot and we hit the 15,000 more or less 900 resistance up here, this big rejection that we basically rejected again, and we started first rejection, second tap, and then continuation with active trend lower highs, lower lows. And look at this consolidation on opening print, and then we flash the range This is why I open with this time frame chart, for you to understand that in between this range after the open, this was single prints, and usually single prints provide a lot of momentum in that direction. So there was no volume here, no participation, and this caused this huge sell-off before low of day. Then we try to reclaim, and we are chopping in this range, probably repairing a lot of participation down here. We are still we are flat. Well, maybe not flat, but if we open right here, we are 0.25 in the red since the open, but 1.20 on the day, because in pre-market we gapped a lot. But Nasdaq is way stronger than the S&Ps. Why, you may think? Well, banks are FDIC is increasing the capital requirements for banks. That's one thing. So XLF is quite in the red, 0.45 in the red, and that affects S&P's performance. And also, IWM small caps are also in the red. Dollar, look at this. This is quite interesting, because usually when dollar is this strong, equities feel the pain, and stock markets, Nasdaq is holding quite good. But once I saw this huge move into the equities open on the Nasdaq, this was certainly a trap. At some point, this was unsustainable. XLF, financials, and small caps were not following suit, and S&Ps was weakening, and this was just a matter of time. I went short up here at this resistance level with a stop up there, and it went straight to my target, opening print target 1,200 on that trade. And I'm having a good day, because that pre-market provided me a lot of opportunities for the London Open at 3. Since then, we are reaping. So I took advantage of that move, and then into the open, just to fade a little bit of this gap. We are holding this range, and these are my key levels. If we are in this range, we are going to be chopping around sideways range. There's a possibility of a full repair of the gap down, but we can also be bullish and start looking ahead again to break these single prints and then continue higher. Manage your expectations today, because this is a huge day after FOMC and Meta earnings. There are still a lot of earnings. The bullish sentiment is huge, but you really have to adjust your expectations in this market, because anything can happen, and it happened. That doesn't mean that we can hold and continue and maybe finish on the green. That would be quite good, because the daily, it's already providing good bounce of this ascending triangle continuation, a good bounce of just last week low. So we are certainly holding, and buyers are there, but you have to really adjust your expectations, manage your risk, because this might be a huge consolidation, and then we can just continue fading lower. If we break these lows of day, a lot of buyers will liquidate their positions, and that will contribute to the selling pressure, and we can certainly see a gap fade, and that would be enormous, massive move to the downside. So be really careful on that. Following with the dollar, look at this huge move. You have to certainly watch dollar and yields, because they are pushing higher. Not only the 10-year that was this morning pushing, that's the long-term one, but also the 2-year one, the controlled by the Fed yield. The 2-year is 1.40, and it's looking quite bullish, consolidating here and pushing higher. 2 big green candles. I mean, this is not following what equities are doing. So be really careful with the rest of the day and tomorrow, Friday, because we are certainly seeing quite a little bit of divergences on these markets. Also divergence metals. Look at gold. Gold is minus 1.20% on the day. I was expecting gold to push higher, but this is converging with the dollar pushed to the upside. Gold, copper, big red candle rejection of this level. I'm actually going to flag that. Check. They move some of these. Here it is. So basically, I want to track this resistance because it's quite important, these two rejections, resistance area, and also I will like, where's the X? Where's here? That's one rejection for the gold. Second one, then maybe third one here. So be very careful with these rejections on gold because metals are quite in the red. Look at silver, 2% in the red today. So everything is converging, everything is aligned, but the equities market. So that's why I'm recommending you to really manage your risk today. It's not everything so bullish that we can just long everything and buy every pullback. We are seeing quite a lot of consolidation down here, and this might be a huge bear flag there, consolidation, and then gut feel. This might happen, and you have to be prepared for that. If you want to long this market, be really careful. And I think that's all. Quite a quick update for today, coupled with my earlier video today in the morning. I really recommend for you to watch that video to really, because I cover all the earnings of the week, all the details on the FOMC and the forecast for today. So just give it a like and give it a watch, because that will certainly provide you with a lot of information for today and also for tomorrow. One thing, tomorrow I'm out, I'm having a long weekend, so I will not upload any videos. I will see you guys on Monday. And thank you for the support. If you found this video useful, please give it a like. Watch the other video earlier today also. You will really like it. And please support to the channel. Subscribe to the channel. I upload videos every single day for market forecast, market updates, and market recap. I appreciate your time watching these videos. I put a lot of effort on those. And remember that discipline, risk management are really key for your success, two skills that are really valuable for trading these markets. Stay safe, everyone. Remember that I'm out until Monday. Have a nice weekend and see you then on Monday.